Bloomberg Audio Studios.
Podcasts, radio, news.
Welcome to In the City, a podcast from Bloomberg about the stories shaping the City of London. I'm Francine Lacqua.
I'm Allegra Stratton.
And I'm David Merritt.
There's definitely a national obsession about house prices in the UK, houses in
more
general.
More than an obsession, it's a religion.
Monomaniacal.
It's a favourite pastime, and this is like house
Not
prices.
Not for you though, Fran.
I mean, I follow house prices. I don't go shopping on Rightmove or Zoopla.
Do you not spend your Saturdays flicking through Rightmove?
No, I'm very good at wasting time in other ways.
Fantasising about houses in the country, Allegra?
Do a little bit, yeah. You don't. I'm on my own then. I think I'm on my own.
So Dave is the English countryside and not the Amalfi Coast.
Well, I'm actually a grizzled urbanite. I like living in cities, so I'm not that interested in rolling green fields and mud. We're obviously all in election mania at the moment, the other national obsession. But the question of housing is a big one, isn't it? Because, so my 14-year-old son told me over the weekend he's been reading all the manifestos and he was very impressed with some of these pledges on house building. And I had to slightly pop his bubble and say, well, they always say that, don't they? But how are they actually going to do it? How are Labour going to build millions of homes? But for young people, it's the big problem facing them, isn't it? As they grow up, how are they going to afford a house?
I think we've talked about before on this podcast how before this sort of actual war of an election started off, that house building was a really clear place for Labour to go to. I think we've got a piece on the Bloomberg site right now this morning about how planning has really meant that the NIMBYism became the kind of dominant dynamic in the UK, that it was really, really difficult. No matter how many times...
And that's NIMBYism.
Oh, sorry, not in my backyardism. No matter how many times different Tory prime ministers over the last 14 years tried to your point, Dave, tried to get house building going because that understanding, they all get it within the Conservative Party, different iterations of it, all get it, which is that if you are making it impossible for anyone to buy a house before they're, 40? You are not a party of aspiration. You are not doing what you need to for that kind of basic contract to work between you and the voters.
But it feels like it's maybe the Tories that have the most to lose. Because if you look at the political spectrum, so you probably start out as a young one, more left-wing, and then you get on the property ladder, you have a family, and so you go further to the right. And if you don't have that aspiration anymore because it's just too costly to buy a house, then it kind of changes the business model of the Tories. So this week, after all the manifesto pledges, we thought it makes sense to bring someone who knows. Have you heard of Skipton?
Very much so.
I have because of you, Fran.
I've never heard of him.
Okay, it's not. I mean, it's kind of. We joked about it with the chief executive because it's probably one of the biggest companies that you've never heard of, because 1 in 10 houses are bought and sold in the UK through Skipton, but it's really a lot of the letting agents that we know. So it's John D. Wood, it's like Hamptons, it's Connells. So you're probably more familiar with those names.
That just shows you how powerful you are, Fran, that you can tease the CEO that no one's heard of that company and they're okay with it.
All you need to know about UK housing.
Poor bloke.
Was Skipton chief executive. Well, Stuart Haire is a big deal. It's a big cheese. We sat down with him last week. He's the chief executive of the Skipton Building Society Group. And again this week, really a look at what direction is home affordability heading in Britain, and really what could the next government mean for the housing market.
Welcome to the City of London.
The City of London.
The next station is Bank. Please mind the gap between the train and the platform.
The financial heart of the country.
The city.
The city.
Welcome to In the City.
Stand clear of the doors, please.
Stuart, thank you so much for joining us.
Thank you.
Stuart, give me a sense of how different the London market is to the rest of the country, and actually what part of the UK do you find most interesting?
Actually, all the markets are quite distinct. So it depends a lot on the economic activity that happens around a market. And of course, by far the most economic activity is in London. And there's a little bit of a real estate shortage. So you tend to find inflated house prices against the affordability of people within it. And the challenge there is, you've got essential workers, nurses, doctors, etc., who are actually struggling to buy. So you see a very buoyant rental sector. But you do increasingly see developments popping up. You see them along the Docklands, etc., but they sell quite quickly. Elsewhere in the country, as you move into more rural belt, you saw a big switch during the pandemic as people wanted a little bit more space. call it a little bit more luxury around what they could buy for their money. And that's slightly come back again. But we are seeing good house price increases in areas like Scotland, like the North East, like Yorkshire. We're actually seeing quite vibrant activity there.
Talk to me about rentals in London.
This quarter one this year to quarter one last year, they've actually moderated in growth of about 7%, according to the data that we see. That said, that's 7% increase, and last year was closer to a 10-15% increase. So yes, they are shooting up, and it comes back to, we need to be careful not to demonize landlords. If you think about housing as a sort of macro asset, then you've got, first of all, social housing to help people have a house over their head. Helps with homelessness, it helps with social rehabilitation, and it helps with people that just simply can't afford a rent to have somewhere to stay. Stability, almost, democratic stability is crucial from social housing. So we need more social houses. But then people want to progress out of social housing, and the first step in that ladder is into rental accommodation. So well-regulated, responsible landlords play a really important part in the housing market, and we need to be careful not to demonise them. I think as long as we have a shortage of supply, these rental prices are going to continue to go up, but there's only so much that people can afford. So what we're seeing now is a moderating, because quite frankly, they're getting priced out of the market, and that's leaving a lot of people living, with their parents for longer, sharing, sometimes in squalor, with a lot of their mates. And I don't think that feels right. The aspiration is, can come out the economy if that happens for too long.
As interest rates went up so fast, was there a real mismatch in what, I guess, buyers were willing to spend and what owners wanted to sell the places for?
So what happens when you see big movements in interest rates is there's a little bit of a sort of dislocation. It's like, is now a good time to buy? So there's a sort of pause or a caution. Could it go up higher? Should I jump in? And so just that element of caution was such a big purchase. I mean, this is one of the biggest purchases you will make in your, probably for most people, the biggest purchase they will make in their lives. So people want to be sure-footed. So when there's volatility, either political volatility or monetary volatility, people are a bit more cautious. Where there's stability, and arguably where there's greater affordability when interest rates are lower, there's an awful lot less caution in the market, both for buyers and sellers. So to answer your question, more specifically, the sellers were still wanting to sell, but the buyers were more cautious, and that meant the activity levels reduced.
I mean, it's amazing that we didn't see more defaults, right, on some of the mortgages, given how fast the interest rates rises came.
Well, look, we did see an increase across the industry. In Skipton, we were lucky. It was very much a very moderate rise, but people did have to readjust their finances. There's no point in sort of the practical reality of this is that it's not a macroeconomic trend. It's suddenly £1,000 or more is coming out of a household budget, and they have to be able to find that £1,000 from somewhere. So people had to adjust, a little bit less retail spending, maybe slightly different plans for holidays to be able to make the mortgage payment, which to a lot of people is the last thing they would want to give up on. So absolutely no complacency. I think people were stretched, but it hasn't then affected into, secured property repayment rates.
So when you give mortgages out, is the stress level like interest rates at 7%? Is it 8%?
Yeah, it's around those levels. Basically, you add on a stress percentage to whatever the prevailing rate is. And ultimately, it's above the standard variable rate. Now, we keep our standard variable rate pretty low, but we have to stress above that so that people are able to cope. So yeah, they've got affordability that should cover them as interest rates increase. But that doesn't mean people in the meantime don't, if you like, expand their waistlines, excuse the term, into that extra income capacity.
And Stuart, you also offered, a mortgage without a deposit.
That's right.
How's that going?
So if I take a step back as to why, because people could view it as, my goodness, they're reckless. I'm not even asking people to have a deposit and what could happen to house prices. I go back to the premise that everyone should be able to buy their house if they can afford it. So we put a stronger affordability control into that product to make sure that those people who were paying rents could get a mortgage, so long as that mortgage payment was below the rent. So they've got a proven track record of being able to pay the money. So from that perspective, we weren't in any way putting people into more risk of default. But what they're doing is they're buying a house to live in. It's not an asset to own. Ultimately, it's somewhere they're going to live. And the product term was over 5 years. And so therefore, a fairly, even if there was a house price reduction, ultimately over 5 years, it's likely that it would have recovered in some level or other. So people were buying something they could afford, that they could do work on, that they could live in, they could have their families in, it could get closer to their work or whatever else. But the only thing that was different from them from other people was they just didn't have the ability to save up that big deposit, or they didn't have bank of mum and dad to rely on. And I felt that was an injustice that we could do something about.
So how many mortgages of that kind have you given out? And again, are you expecting more? Because you're right, it is a justice. Kind of, it I guess rebalances some of the injustices.
Well, we've exceeded our expectations, actually, because we launched at the same time as interest rates going up, which put a further squeeze and therefore made it less available to others. We've seen that moderate back down, and we've seen over 100 million in drawn down mortgages as a result of that specific product. But across our overall first-time buyer range, because we offer products as well where more than one borrower can help someone own a property. It's called Income Booster. And with all the different interventions we've done around first-time buyers, we've seen a massive increase, over 40% increase in the number of first-time buyers that we've helped to over 19,000. And we see that trend continuing. So we're pleased, but we'll keep innovating.
Is there a policy from the government that you think has worked the best in trying to help first-time buyers?
I think all interventions from government, particularly monetary ones, like guarantee schemes or others, they can have a short-term effect on the market. They can have a short-term boost in demand, but actually you want big capital markets to come in and actually support the innovation to help people. Undoubtedly, during the pandemic, when the government stepped in and said they would bring back the mortgage guarantee scheme, that gave confidence in the lenders to still lend at higher LTVs and probably gave a boost to 2022 mortgage volumes. 2021 and 2022 mortgage volumes, there was nothing happening in 2020. I think these types of things can be helpful, but they shouldn't be a crutch. We shouldn't be using taxpayers' money to help people buy homes. What I would love to see is, a little bit more thoughtfulness around transaction taxes, because they slow the economy. And a transaction tax, that's like stamp duty. Anything like stamp duty where effectively you're penalising the act of buying and progressing feels like a retrograde step.
Do you think policies will change after the election?
I think they'll change. Will they change in a way which completely fixes all the issues of the housing market? I mean, we have real deep structural problems in the housing market. Chronic shortages of supply of affordable homes, shortages of supply of private rental sector homes, and indeed homes to buy. I don't think policies are going to fix that quickly.
But so why has it been so difficult to build new homes? And this is something that, even at the local authority level, we'd hear from almost every couple of months that actually they wanted new homes, and then something would happen that they were unable to, and it's not funding.
Yeah, there's an awful lot of headwinds against the capital to come in to buy the homes. Let me try and explain a few of them. The first one is planning permission. It is exceptionally hard to get planning permission. The local planning managers have been depleted of resources, so there's less of them, so there's big backlogs. To even get, basic works on your house done, people are observing the sort of backlogs. And there's no central and then localised plan. Central government should have a plan that should then be federated down into local councils with the right support, etc. Because you can't just go and build houses. You need electricity, water supply, sewage, etc., set up in those areas. And there just isn't that longer term plan. Without the longer term plan, it's hard for capital to deploy in. There's also been a whole load of sensible but difficult rules to navigate that aren't fully thought through. Very important policy, nutrient neutrality. That is important because we don't want to be polluting our rivers, etc. But actually how it's going to work is not always well understood, and that can put capital off, even patient capital. The other thing is people are cautious if they own a house in the local area to have other houses built around it. It's a horrible term. I'm not a big fan of it, but NIMBYism sort of does exist. Please, we agree
not
there should be more.
Backyard.
Not in my backyard. Yeah, exactly. I think there should be more homes, but just not here. That comes through quite a lot. And so you do get an awful lot of resistance to planning and planning developments. And I think we need central government to have a more consistent strategy. This is a systemic problem. We need systemic solutions that stay the course of time. We've had 13 housing ministers, 15, I think, in the last 12 years. That is a lack of consistency, which means that big problems don't get solved.
Will Labour do better if they come into power?
Do you know, the reality is anyone that brings a purposeful plan and a sort of stability is going to help the market to sort of recover. But we're talking about the type of house building that we haven't seen since after the war. We have that level of shortage of supply. So this is a big national effort that's going to have to go behind this, and it needs to be front and centre of any political party's ambitions. But it's got ancillary effects, not just building houses, Francine. As soon as you're building houses and people are moving in, you're giving trades. There's also work to retrofit homes to make them more energy efficient. You're actually building the internal economy, which can drive GDP. So yes, we need to have more foreign investment. Yes, we need to be a better exporter, but also we need to drive demand internally. And house moving, house buying, that really drives domestic economy.
And it's not necessarily if you have new homes that actually the price of the other ones around it goes down.
No. When you have such a level of chronic shortage, naturally, supply and demand, any economist listening to me will go, well, of course it does. But actually, you have an awful lot of pent-up demand that isn't being fulfilled just now, that has the capacity to spend. So the more that you build, you're just going to be allowing that demand to find its price point. So it doesn't necessarily result one to the other. Albeit, what I wouldn't want to see is a continual shift in house prices going up faster than incomes. It just becomes a generation without the opportunity to own a home.
And again, that changes elections outcome.
Massively. You've got a huge voting base of younger new voters who are sitting there thinking, how can I get the opportunities that were afforded to my parents?
So what happens to house prices?
Going forward?
Yeah, in the next 8 months?
Let me do the macro view. It's been a pretty good bet for 120 years, and I think it will be a pretty good bet for the next 120 years. House prices, even in horrible climactic times like 2007, 2008, they went down, but then they came back up because demand is there and people really need a place to live. So as an asset class, I'm very bullish on house prices. Short term, I see a lot of stability now coming into the market. There was a small negative correction. During the pandemic, house prices shot up. Probably a little bit outside of the core economics. And we've seen a correction back down, but now I see stability for the next 6-18 months and then a gradual increase again.
Why did the pandemic make prices shoot up? People wanted to move and there was very little on the market, actually. That's
exactly right. It was just a supply demand and then the whole asset class moved up. And what we've seen is there were some properties actually that maybe got overinflated. Certain places out of city centres, and city centres came down a bit. Other areas went up a bit, and there's just been a correction back as people get back to offices and get back to working in city centres.
So outside London, where do you see the biggest value? I don't even know. I mean, you're not here to give, property advice.
No, I'm not qualified.
But I don't know who is, frankly,
exactly.
Given the prices jumping around so much.
Yeah.
But where's the next hotspot?
So I think you're starting to see real, and it all links to economic activity. And I'm not someone that talks about levelling up by reducing London. I'm very much someone that wants to increase other areas. So around the Skipton area, North Yorkshire, Manchester, Leeds, etc., there's an awful lot of economic activity starting to pick up. You're starting to see activity around universities. Not just the Oxbridge universities, although they're always a powerhouse of economic growth and innovation, but you're starting to see stuff of data and AI and other modern technologies into the sort of Sheffield, Leeds, Manchester areas. I'm pro-Scotland. I live there. I'm Scottish. I'm hoping we win the Euros, but probably hoping without any possible dream that will ever happen. Anything can happen, except that. I will confidently predict. But, the activity, the economic activity is really picking up in places like Edinburgh, and again, around the university zones, you're seeing more economic activity. So I do see the concept of levelling up starting to happen, but not by levelling down London.
But do you get at dinner parties, and I ask you this on TV, do you get asked mortgages? I mean, I get asked about mortgages everywhere I go, and I'm not an expert.
Boring people at your dinner parties.
Is this like a national obsession?
It is a national obsession, and it's a national obsession that splits into two. It's like, surely it isn't fair that we can't get on the housing ladder. So if you're lucky enough to have dinner with people that are younger, mostly they don't want to have dinner with me. But I've got quite a cool wife, so they sometimes do. But the reality is, for most other people, they are asking about mortgage rates rather than house prices per se. I think people have psychologically baked in that house prices are pretty stable, but they are worried about, is mortgage rates going to go up? Are they going to come down? Because quite a lot of the UK remortgages on quite a regular basis. So they're like, should I remortgage now or should I wait? And I'm like, well, I don't know, a magic wand. If I knew that, then, I'd put big bets in the markets and I'd be an investment banker paid a lot more. But the reality is, I think we're in a position where interest rates will never get down, or it's very unlikely they will get down to the 0.5s again. So we're probably back to a steady state normal rate of about 3.5%.
Stuart, thank you so much.
Thank you.
Thanks for listening to this week's In the City from Bloomberg. This episode was hosted by me, Francine Lacqua, David Merritt, and Allegra Stratton. It was produced by Summer Sadi. Production support and sound design by Moses Andam. Brendan Francis Newman is our executive editor. Sage Bauman is head of podcasts. Special thanks to Stuart Haire. Please subscribe, rate, and review wherever you listen to podcasts.